Thanks so much for tuning into Profit Insights. Consumption has become a big talk point, especially because we are entering the busy season. But not just that. The idea is to try and talk about the emerging trends or trends which have already emerged maybe, but have a very long duration. And while to the minds of the skeptic, it may seem that some of these have already run their course, to the mind of the optimist, maybe there is a long runway left. And I think that is what I'm gonna try and probe today with somebody who looks at this space amongst others very, very closely. Rohit Chordia, he's Director Investments at White Oak Capital and joins us right now in our studios to talk about that. Rohit, great having you. Thanks so much for taking the time out.
Thank you, Neeraj, for having me.
The pleasure is entirely ours. So,
absolutely.
I'm told that you look at all things consumption amongst others.
I do.
I want to try and talk about 2 or 3 aspects of consumption. The first one is, let's say, quick commerce, because ever since Swiggy's balance sheet has been released, or the papers have been released, people have started comparing what's happening in that space, what is Zomato doing versus Swiggy doing, and of course, what are the investing implications for this from a really long-term perspective. Now, my starting question is, are we looking at a space that has done a little bit, but the larger runway of growth is still ahead of us?
I think that would be true of all things consumption in India. There is a long runway ahead for pretty much everything. So I have a very strong belief, and I think we at White Oak share this belief that Indians will consume more and consume better of pretty much everything, as long as, of course, GDP growth, etc., the macros remain favorable. This is going to be the long-term trend, right? So we are only at the cusp of the beginning of the consumption journey. Yeah, that's point number 1. Number 2, as consumption grows, the business models around consumption will also evolve. So the quick commerce space that you spoke about is really on the retail side. So even on the retail side, if you were to look at it, right, and compare India to a lot of other markets, whether developed or other developing markets, right, the development of modern trade, e-commerce, we are still a few years behind a lot of other markets. So as these new business models emerge, and quick commerce is going to be one of those, and quick commerce specifically solves a few India-specific problems, which is why you've seen the rapid takeoff. So proof of concept now is delivered. Question on how long is the runway going to be? Probably decades.
Probably decades?
Probably decades, yeah.
Very interesting.
We're probably at the tip of the iceberg here.
How does this typically work out? So if we are at the tip of the iceberg, and some people would argue that the J curve has already been seen. So maybe food delivery or rather dine out might be moderating a little bit to some people's minds. But then suddenly there is food delivery and then ancillaries crop up as well. So how do to your mind these businesses, let's say I'm using examples of Zomato and Swiggy. I'm not trying to nail down a particular company or some of the others. How does the business model evolve to your mind, let's say over the course of the next few years, since we can't talk about decades really?
Yeah, so let's take a step back, right? And you use the words skeptics and optimists, right? So even I was a skeptic. I would like to call myself an open-minded skeptic till a couple of years back on whether quick commerce would succeed or not as a business model. There is no question, or there was no question in my mind even then on whether this is a use case, right, that is needed by the consumers, right? And as I was saying, it does solve a few India-specific problems. I mean, the sheer population density that we have, traffic density, right? So while your nearest DMart or a Reliance retail store could probably be 1.5–2 kilometers away, it is probably half an hour of effort to go to the store and come back to your house. Yeah, quick commerce solves that problem, right? India has a lot of, in addition to stock up at the beginning of the month, you have a lot of top up spending through the month on grocery and other items. Right? That's again a very, very, very unique Indian phenomena in terms of the degree of top up as a percentage of overall basket. Right? Again, quick commerce solves for that. Your last minute requirements, etc., etc. Now, what changed my mind on quick commerce? Right? What changed my mind really was sitting at one of these dark stores in Ahmedabad a couple of years back through the day. I just wanted to see the thing in operation. And it opened my eyes to the kind of use cases I had not thought about.
For example?
I don't want to, maybe if you want to get into examples, the first thing I saw when I entered the store, and this is Ahmedabad we are talking about, right? You eat a lot of farsan and all there. So these 15 kg tins of edible oil. of edible oil. Not something I would have expected to see in a quick commerce store, because in my mind, this was really, serving a customers or a household's top-up needs.
Right.
Right? And I reached the store at 8:30 in the morning, and the first order I saw, come in was for a contraceptive, 8:30 in the morning. Right? So there was these unique business cases or, or use cases from a customer perspective that I saw. I saw an order for just a single pack of Lay's. Now this, of course, must be a cranky kid at home, with maybe only one parent around, busy, etc. She didn't have the time to go down. So she actually paid 30 rupees delivery charge to get a 20 rupee pack of Lay's. I saw many such use cases that opened up my mind. The second one was really a personal experience where, my kid, he was in, I think, 8th grade at that point in time, needed a lab coat for the next morning. And he totally forgot about it and asked me to get one at 10:30 in the night. Check Blinkit, it was there. Right, so that really opened, in some sense, the world of use cases that this model was going to serve. And being an open-minded skeptic, started working more on the theme and saw a business case evolving. Yeah.
Okay, so what is this business case now going ahead? Let's say the next few years. What's the kind of growth that you envisage? Is this a winner-takes-all market, or the top 2 or 3 players getting the lion's share? And do we have those established already, or could newer entrants come and challenge it?
There is 2 or 3 questions there. One is, what could be the growth rate? Now, very, very difficult to say. So even the best of crystal balls would not be able to do justice to this question, but let me give it a shot. We are talking about a broader TAM. If I were to look at grocery plus, there are certain other use cases that have emerged, whether it is electronics, toys, games, etc. That quick commerce guys have started serving, right? We are probably talking about somewhere between a $700 to $900 billion overall spending on categories that quick commerce companies now stock, essentially, right? This is of a total, if you were to look at total consumer spending, that's upwards of $2 trillion, right? That's your private final consumption expenditure. So we are talking about a $700 to $900 billion overall, sizes of the categories that these guys are now serving. Now you'll have to then start taking cuts to this, right? This model needs a certain level of population density, requires a certain, density of SEC-A population class, maybe B+, right, which it appeals to and serves well. If you were to do all those cuts, take the city cut, which, offers that population density, take the population cut from, by SEC classes, etc., you're probably looking at maybe a 10th of the market being serviceable today. Now that's your serviceable addressable market. You can apply then another cut to it, which is profitable serviceable addressable market, right? Your dark stores have to be viable as independent units. That's really the core of retail.
Right.
Core of retail is your model has to be profitable at a store level.
Yeah.
Now how many such dark stores can be there? We already have, a Blinkit which has crossed 600 stores. Swiggy is close to 560. Instamart. Zepto probably somewhere between 350, 400 at this point in time. So you probably Big Basket, add a couple of others who've tried Flipkart, Minutes and all. We're talking 2,000 stores, right? Now this number can be materially higher. You have Blinkit's own guidance at 2,000 stores in the next couple of years. I think others have similarly aggressive plans as well. As use cases emerge, now how will this market grow? You will have new households adopting, or warming up to quick commerce as a service, because the utility is there for a lot of households. And then once it becomes a habit, you also get higher frequency of orders from households who are already using the service.
Sure.
This is how the market will expand, and we have seen improvement in both these metrics. New households coming in, as well as frequency going up for the last few quarters. It has actually been a J-curve, right? As things stand today, I think last year, all these players put together did about $4 odd billion in GMV. Yeah, this year, probably we could see all these players combined hit $7 to $8 billion. Now, if I talk about the overall TAM that I spoke about, we are probably looking at maybe 1% share of this $800 odd billion TAM, but more cuts that needed to be applied, you're still high single digit maybe. And this number can keep growing.
So you effectively saying that it may not, we don't know, but it wouldn't surprise you if we actually see between a 50 to 100% CAGR for the next 5-7 years.
Tough to say, lower end of that probably, because we are talking 7 years. over a 7-year period, there is a huge difference between.
Yeah, what is there right now? Okay. But still, between a 25 to 50% CAGR won't surprise you.
Wouldn't surprise me. Won't surprise me. In fact, next couple of years should be even better.
Okay. Are the established players the ones which will take the lion's share of this growth, or could newer entrants come in, because they will also need to be deep pocketed? Yeah. So I'm guessing even anybody who thinks of this will also be a deep pocketed player. Are the players established?
So what we are really talking about is, are there barriers to entry in this industry?
Right.
Are there barriers to scale in this industry? Are there barriers to thrive in this industry? So, I mean, often we talk only about entry barriers, right?
Yeah.
Certain industries, certain sectors, it's easy to enter, difficult to scale. Certain sectors, it is easy to enter and scale if you have capital.
Yeah.
But then it is very difficult to thrive. Right? Another example from the retail universe that I can think about is QSRs. Very easy to enter, doesn't take a lot of money. Right? Easy to scale as well if you have capital. But how many players have succeeded?
Exactly.
It's very difficult to thrive. So if you have to apply the barriers to thrive, I think that is where things will become difficult for new entrants. And you have some deep-pocketed, players in the industry. I don't want to name them, who've already either entered in a small way or are thinking of entering because their business models are getting challenged. Think of horizontal e-commerce companies. Think about modern retail. There is some delta or impact on growth rate even there, right? So some of these players will enter this space. Now, what makes this business, in my view, difficult to thrive in? Because there is a huge learning curve involved here. No amount of capital can, sort of shortchange or give you a shortcut to that learning curve.
Got it.
Right?
Okay.
And that is the biggest moat, if I can use that term, that some of the incumbents have.
Okay.
Right? Whether it is learning curve on the tech side, whether it is learning curve on understanding the consumer, and you have to remember that you try and understand consumers at a hyper-local level in this business. So it's at a pin code level that you start understanding the consumer dynamics.
Yeah. And the fact that AI and data helps you.
Yeah. Even in a Mumbai, what sells in Borivali could be completely different from what sells in Kolaba.
Most certainly.
And that learning over time accumulates, and that is difficult to replicate.
Got it. So last question on this before we move to retail is that when you are making an investment case, you are building out a hypothesis, you hope that it will work out as well. So in your investment hypothesis, I heard you say at the start that it's decades of growth ahead of us. Maybe it's hyper in the next 4, 5 years, 6 years, then maybe cools off a little bit as well. But would you reckon that outsized investment returns in some of the well-managed quick commerce companies over the course of the next few years is a distinct possibility?
I would think so. It's, returns are not just a function of how fast an industry grows. It depends on a lot of other factors. Your starting valuations.
Yeah.
Right? How does profitability shape up? How do the ROC characteristics?
So I want an easy answer here. The starting valuations to now. Your question, there is a Swiggy IPO, there is a Zomato out there, there is Zepto private markets valuations. So from here on, do you reckon that investor returns?
Since you asked me whether it is a possibility.
Possibility.
Yes, it is.
Okay, but a decent possibility.
There is a decent possibility because, it's not just businesses evolve. So, our assessment of businesses sometimes is limited by what we see and the limitations of our own imagination.
Yeah.
Right? These businesses evolve. So,
most certainly. I get your point. By the way, viewers, keep in mind, nothing out here, any chance we will not discuss stocks, but nothing out here will be an investment recommendation. More a fleshing out of a thought process that Rohit has. Rohit, so lovely talking about this first aspect. I would like to dovetail a little bit into the other aspect of consumption, which is retail, because there is a connection out here. Now, fascinating developments in retail in the recent past. If Trent has done to the shopping experience what it did, just this week we've also learned about they also venturing into lab-grown diamonds. And I don't want to make this a Trent conversation, but I'm saying that modern retail is evolving into categories that we didn't think were possible some time ago and creating giant businesses out of them. How do you look at retail currently when you look at it from an investability perspective?
Sure. And since you mentioned Trent, I am making an assumption that your question is specific to physical retail.
For now, let's start with that.
Yeah. So the obituary of physical retail has been written many a times in the last at least 20 years, right? And it has been partly true. You've had a large number of businesses fail in this space. If you look at the US, right, a lot of these phrases like ghost malls and all, have entered the lexicon in the last couple of decades, right? So partly true, but then at the same time, there are retailers who have thrived, physical retailers who have thrived. They've reinvented themselves and have thrived. Now, what are the vectors on which you can thrive in physical retail, right? You have to offer the consumer who has the choice of shopping on an Amazon or a similar, e-commerce platform. You have to give that consumer a strong reason to come to your store and shop, right? That's really what your job is as a physical retail player, right? Now, what could these reasons be for the consumers to come and shop, right? And I've thought through this, I and the team at Vito, we've thought about this a lot, and we have sort of, seen that retailers who have done well, physical retailers in the last couple of decades, despite the threat of e-commerce, and a very real threat, right, is retailers who have offered the consumers either superlative experience or superlative value. If you're caught somewhere in the middle, and there is an author consultant called Steve Dennis, he calls it the boring middle. The boring middle. So you can't be in the boring middle and thrive, or even survive in the long run. So as a retailer, the spot you need to not be in or avoid is the boring middle. Either differentiate on experience. Think of Tanishq, right? Superlative experience in the sector that it operates in. As a jewelry player, right, Tanishq really differentiates, among other things, on experience. Or think of a DMart, which is on the value axis, right? Ultimately, you have to deliver a wow on one of these two. What DMart delivers is a positive sticker shock. You look at the price and you go, wow.
True.
What a Tanishq delivers is a positive experience, right? A differentiated positive experience. So if you stand for one of these two, the second aspect is retail is also about making a lot of choices in terms of what your business model is going to be, what are you going to sell, to whom are you going to sell. The more sure you are of each of these aspects, and you keep becoming better than your competition on the choices that you've made. And you mentioned Trent. Trent is a classic case study on being very clear about what they do, and at the same time being very clear about what they do not do. And they've kept on getting better at what they do. And that shows up in the way Trent has outperformed its peers. Yeah.
Interesting. So do you reckon that companies by and large which have chosen either end and successfully kept on expanding their moat or the entry barrier or their expertise into that have a larger chance at longevity? Because in physical retail, yes, the obituary for the format may not have turned out to be true, but individual obituaries have turned out to be true, and companies which were once thought to be infallible have fallen by the wayside. So what is the learning here? How does one bet on companies, or how does one build a hypothesis that this is a business that is likely to survive the test of time? Of course, if it doesn't, then you change, which is fine. But right now, when you think of a business, how do you decide what are the determining factors, and are starting valuations a concern? Because again, I'm just using this as an example, but every single point of time, people have called out Trent valuations as being expensive. The stock has delivered phenomenal returns over the next few, right? So I'm just trying to understand, how do you approach this space, therefore?
Sure, I'll probably start with a quote I read some time back and has stuck with me. This was a German philosopher, I forget the name. He said, talent hits a target that no one else can hit. But genius hits a target that no one else can see. Yeah? So what your job as an investor really, right? If you can separate geniuses from talents and talents from non-talents, right? Even this latter, which is just to identify talent, right, will stand you good as an investor in terms of finding attractive investment opportunities. But if you can find that, those one or two geniuses that will emerge, right, and while it's not a winner-take-all market, right, the geniuses do end up creating disproportionate value. It's easier said than done. There is no, let's say, set of characteristics necessarily. I think it differs by subsectors that you're assessing, or the company that you're evaluating is present in, right? So what Trent has done in apparel, the sort of choices they've made, right? being laser focused on what they do and what they do not do, as I said, right? May or may not apply in some other subsector within retail itself, right? So a trend may not succeed as a QSR player, just saying that, right? Hypothetically, yeah. So you need to be clear on what you think are, sort of the factors that will determine winners in the space that a particular company has chosen. And this, again, as I said, will be an evolving list. Right? As businesses evolve, consumers also evolve, competition also evolves. So what geniuses do well, right, is they lead this evolution. They shape the curves, right? Talent can follow the curve very well, do well. Geniuses actually shape curves. In whether you're talking about FMCG companies, they'll shape their
for that
categories.
matter, any company, right?
For any company.
Any business.
In any business, right?
Right.
So what you're looking for is some of those characteristics, and it is a lot of soft factors. Most important is, I think you have to look at the choices being made.
Yeah.
If you see any confusion there in terms of what to do, what not to do, generally not a good idea to think of that company as a long-term winner. Clarity of business model, clarity of choices, and retail is a business of, a number of choices that you need to make. Right from, it's a business of detail, right? So right from what store format, store sizes, what are you going to stock, who are you serving, what are your price points going to be, sharp,
lot of
not
stuff.
so sharp. So it's a business of detail.
Okay.
There are a million ways to die in retail, and companies that can avoid all of those million ways have a chance at succeeding.
But that's difficult. So now we have 1.5 minutes left on the show.
Sure.
What I want to understand is, do you believe that the genius that you may have identified, if the starting valuations are a hindrance, it might still be okay to bet? Because like I said, I mean, a lot of these genius companies, and let's say a retail investor watching this right now would look at it and say that, okay, this company seems to have done okay. But I hear every time on television that it's an expensive one.
Yeah.
How does one approach that? We have 60 seconds.
So a couple of things. One is, clarity on what metric you're evaluating these companies on.
What
so
would
you
the
need
right
to,
metric
you need
be?
to, one, you need to have a long-term view.
Huh.
Second, you need to think of the cash flow characteristics of the business as opposed to the more popularly used, valuation metrics like PE, EV, EBITDA, etc. So once you take that cash flow centric view, once you have a long enough time horizon, right, and think of where a particular business could be 5 years out, 10 years out, as opposed to, just focusing on the next 1 or 2 years, I think you'll be fine.
Got it.
Even navigating this valuation challenge, which what you're saying is absolutely right. It's a challenge.
Got it. Rohit, fabulous. But this leaves me wanting for more, so we should try and do this more often. But thank you so much for joining us today and giving us your
Thank you,
thoughts.
Neeraj. Thanks for having me. It was a pleasure.
The pleasure was ours, and viewers, thanks for tuning in to this leg of Profit Insights.